Okay, good morning. Good morning, good morning, good morning. Good afternoon. Oh man, what is that? Give me a second, guys. Hey Signature, how you doing? Hey Linley, good to see you. Hey AL, hey Ray, hey Jumarinas, hey Pips Apprentice. Hope you're all well. Where did that come from? Oh. All right, okay. Alright, just getting a bit confused. I had a spam message, but it was on Twitch. I thought it was on YouTube, so I was just trying to get into that to get rid of it. But yeah, it's all working fine now. Hey, World of Comics, how you doing? Yes, Lindy, let me know if about exactly when you are going to be here. Again, I think you told me, but let me know again. I do have some plans for May, so let me know, and I'll love to catch up. Hey D-Train, good afternoon. How you doing? Hey Jimmy. Hope you all went well. Hope you all did well, traded well, profitably for the FOMC that happened overnight. It dropped the dollar dropped. You know, I had that inkling that it was going to drop. We did talk about it possibly dropping. We projected that it might rise, but we also planned for the downside. I did something very funny, silly funny yesterday was that I was too tired. I couldn't stay up for the news at 2 a.m. and then the press conference all the way through. So I was just, I put in four orders, 2 buy orders, 2 sell orders, both, or 2 in the dollar weakness scenarios, 2 in the dollar strength scenarios, and then went off to bed. That's why I think you guys saw me sending a message in the Discord channel there at about 12 or 1 o'clock, can't remember. And I was just absolutely exhausted. So I had to, just set the orders and let it play out. All right, and also because I had some risk profits or risk margin available from the yen trades over the last couple of days. So I was happy to take on a little bit more risk. And that's why I set, I'll show you the orders that I set. It's exactly as we planned, and just to let it run and see what happens. So, if you guys did any trades overnight, do put it into the chat and let me know. Love to find out how you guys went for your FOMC trading last night or early this morning. Okay, if you're new to the session, do drop a message, say hi, let us know where you're joining us from. If you can help me out massively, do remember to click that like and subscribe button as we get through the session. And if you have any questions at any point in time, please feel free to put it into the chat and let me know. All the regulars, I love you guys. Thank you for joining me again on this daily market analysis. And before all that, we get into a quick disclaimer. Any information contained on this webinar should not be construed as advice and is presented as educational material only. The contents of this webinar are not intended to be a recommendation to trade a financial product. So please remember that your objectives, financial situation and needs has not been considered and should consider its appropriateness to your circumstances. Now, that done. Good morning, Christina. How are you doing? Hope you're well. Hey, Goju. Good morning. Hope you're well. So what we had, we didn't have that much overnight before the FOMC news. What we had following at 2 a.m. GMT plus 8, early this morning for me. Maybe late in the night for you guys. At 2 a.m. we had the Fed funds rate held at 5.5%. No big surprise there. So they held interest rate at 5.5%. In the statement, where is it? Let me bring it up. Oh, here. Right, in the statement, there was no big surprises as well, but it did have a little bit of a dovish tone. Okay, right? Because they say that, okay, although economic activity has expanded at a solid pace, job gains have remained strong, unemployment rates remained low, inflation has eased over the last, but remains elevated, right? Remains elevated. This part we know it seeks to achieve maximum employment and inflation targets. Economic outlook is uncertain, and committee remains highly attentive to inflation risk. Then, what's the other line I was looking for? There. The committee does not expect it will be appropriate to reduce the target range until it has gained greater confidence that inflation is sustainably moving sustainably towards 2%. Right? So that was the that was the uncertainty, elevated inflation, the economic outlook being uncertain. They're not going to do anything until they're sure that it's going to get to that 2% target before they're going to start cutting rates. But the biggest price volatility came during the press conference at 2:30 a.m. GMT plus 8, where Chair Powell was speaking, right? Was speaking and was asked questions. So we had headliners. I'm not going to go through. I've watched it this morning. I'm not going to go play it now and watch it together. But the headliners were that, you know, this was all in the statement. Right? This was all in the statement. Considerable progress. Inflation still too high. Committed to inflation target. A path forward is uncertain. Then I think that one there. Right? Monitoring money market conditions carefully, knowing when to stop. No, where was that line? So, a couple of things that they were highlighting, or he was highlighting, was that they saw a jump in inflation growth in January, which they're attributing it towards a seasonal jump, right? A seasonal increase. So the January number, CPI number, they made it a bit more seasonal. And then in Feb, they're saying, okay, there is also another slight jump in inflation growth. But if you smoothen out the whole not deflation, but disinflation, then it actually is on a long-term trajectory to the downside. So he's trying to, what Chair Powell was trying to do, from my view, during the press conference, is to go, okay, yeah, we saw two spikes in January and Feb, but in the overall view, we're asked you on track towards hitting the target of 2%. We are still on track towards, by the time we come to the point of anticipating a 2% inflation target, they're going to start cutting rates as well. All right? So, there we go. Right? Q1 inflation. It could be a bump. We have to find out. There are some bumps more than others. Labor market is in good shape, right? So I think a couple of months back we were talking about how with such a strong employment number or employment situation right now in the US. Maybe that's going to hold them back from cutting rates. He clarified that, you know, the rate decision is very unlikely or not so much hinged on the employment numbers in that sense. So it all still comes down to a rate decision possibly in May, most likely in June, for the Feds to cut rates depending on the CPI and the core PCE price index, not so much on employment. And with that in mind, I think that it might impact the overall volatility of the employment numbers, the release of the employment numbers moving forward. Okay, still going to have impact, still going to be good trading opportunities, but might lower it down a little bit. So that's something I'm watching out for as well. So that was all the fanfare and fireworks from early this morning at 5:45 a.m. Totally forgot about this. We had the Kiwi with the GDP quarter on quarter. It was a minus 0.3%. It was expected to come out at a 0.1. It came out at a minus 0.1. So not as good as expected quarter on quarter, but better than previous, right? Better than previous. One thing I didn't look at this at 5:45 a.m. I was not even conscious. But what you will notice here is two consecutive quarters of a negative GDP, which is going to signal a technical recession there in the Kiwi, right? In the Kiwi. So actually, before we get to that, just to show you the impact of the dollar index, I don't know why there's this tail. Just ignore that tail to the upside there, right? On release of the news at 2, we saw the dollar break out of this consolidation area to the downside, right? It came down to that 61.8 level, right? So it broke out of that consolidation. We talked about this trend line. We talked about the horizontal support level and that 23.6 level. Since it broke all that, it's dropped straight down to that 61.8 level. Right now, looking like we might see further downside again. So it did not push up. That's why I took away that red arrow to the upside. Then with the Kiwi, you can see that at 5 a.m. So this push to the upside was because of the dollar weakness pushing it up. At 5 a.m. We saw a brief push to the downside because of that minus 0.1 GDP quarter-on-quarter number, and also that's why it's moved from 0.6080 down to 6055. Quite a big move for a 5 a.m. news, because it was not just a negative number, but also because it signaled some level of a technical recession. It did continue to push up, right? It did continue to push up because of that continued dollar weakness to the downside, pushing the Kiwi up. So this was one of the trades that I got into. I'll tell you about the trades I got into shortly, okay? Then at 8:30, we had a lot of news this morning. At 8:30, we had the Aussie employment change, which was, if you look at this, 0.5 revised up to 15.3. Was 0.5 revised up to 15.3. Expected 39.7 got released at a massive 116.5. Right, while the unemployment rate went from 4.1 expected at 4, dropped to 3.7. So very strong numbers here for the Aussie, and that's why we saw the Aussie break to the upside because of the dollar weakness, and then together with the employment news or data release, we saw it push even more to the upside, breaking above that resistance level, now possibly signaling further upside potential if it can break above this point here. Okay. Hey Angel Case, how you doing? Hey Nav, good morning, hope you're well. So that was the Aussie employment numbers. That was the Aussie employment change and unemployment rate release. Again, not much attention paid to the Japanese with their flash manufacturing PMI. I think that the big news for Japan has passed a little bit. Hey Ahmed, how you doing? Haven't seen you for a while. Good to have you back. So I think that the yen news has passed for a little bit. It's back to, like I said, I'm still blocked up. But like I said here, right? The attention now shifts towards the FOMC. Okay, so although we had that, we didn't pay too much attention to it. Through this afternoon or this evening, we do have PMI numbers to be released for the Eurozone, the French Manufacturing and Services PMI, the German Manufacturing and Services PMI, and then the UK Manufacturing and Services PMI. I'm definitely going to ignore all of those, right? I'm most definitely going to ignore all of those because the big ones for today following on will be not so much this. I don't think we're going to see that surprise there with the Swiss National Bank and their policy rate most likely going to hold at 1.75%. I don't expect a surprise in terms of the report or the press conference, but my focus is now on the 8 p.m. news, GMT plus 8, where we have the Bank of England and their decision 5.25. They're most likely going to hold at 5.25. 018. Was this 01? Was this 027 before? No. Okay. So the main focus is looking at the voting, whether it's going to go from 216 to 018. Again, what it means at 018 is no members voting. Sorry, guys. No members voting to increase rates, while one member voting to decrease and 8 members voting to hold rates. This will be a swing. Again, a swing with the rate voting, right? With the way they will be voting. You can see that just in Feb, they went from 306, 3 members voting to increase, 6 members voting to hold, to one person probably went from there to 1 voting to cut, and then 1 went from across, right? So now we're going to see whether this 2 person here are going to switch across to vote for hold, which is going to, if it does come out at 018, it's likely to bring about some downside for the pound, as it would signal some weakness or some dovishness from the Bank of England. All right, and then after that we have manufacturing and services PMI for the US. Again, I'm not going to be too bothered about that after all the big fireworks we had yesterday and today and coming today. Now, looking at the charts here on, or before we look at the charts, I'll tell you what I did last night. So I was saying that, you know, came to 1 o'clock or 1 something, I was like absolutely exhausted. I was running on fumes already. So, you know, I just thought, okay, I'll put in some trade orders. I'll just see what hits and what doesn't hit. I'll cancel that one out. So I had my Kiwi, right? I had Kiwi to the upside. Same thing as we were talking about yesterday. I had a buy stop at 606025. In fact, I had it at 20 pips. I had 20 pip stop loss. Did I have a 20 pip? It was either the Kiwi or the pound that had a 20 pip stop loss. But yesterday we talked about 25, and then a 60 pip take profit. So that one pushed up, right? I didn't even know that there was a bit of a push down during the, well, still sleeping then. Continued up. I came in and closed out my trade there at about that 11 o'clock timing there, and got out at 40 pips. Actually, maybe a bit less. I got about 35. Yeah, I got about 35 pip there. So that was my Kiwi dollar to the upside on 35 pips. It pushed up. Why I closed out of it, I was looking at that point there. I think it tested and it came back down and just closed out. Because I was looking at that point, possibly providing a little bit of resistance to hold the price back. No, it didn't work. That's why I closed out of my Kiwi there, right? So 35 pips, 35, 36 pips to the upside on dollar weakness. Then I had my Aussie in case of dollar strength, but that did not trigger. So that was quite fortunate. I didn't trigger that one and then hit a stop loss. There was no whipsaw. So that one did not trigger, got taken away. The pound, I had that straddle. Right, I had that straddle on the pound. Very fortunate, it went up. I closed out at the same time at that point there. So I waited a little bit long. I gave back some at about that point there. So about 50 pips there. So I'll show you which candle. Oh, that one, yeah. So I closed out the Kiwi, then looked at the pound. It was showing hitting that resistance, consolidating, showing maybe some downside back, and I closed out that trade at 50. All right, so still a good 80, I think it was 80 something, just under 85 pips overall on the pound and the Kiwi from last night or from early this morning with the FOMC. So that was my buy, sell orders. One way to look at it, you know, if you're absolutely if you have the risk margin and if you're just too tired to stay up and wait for the news, you don't always have to wait for the news. You don't always have to trade the news. Right? So that's what I did there. Okay. Any questions so far? I realize I've just been rambling on for a good 25 minutes now. Any questions? Any issues? Let me know. Hey, Mishba, how are you doing? D-Train's asking, I asked this yesterday towards the close of the stream. I definitely missed it. Would it be possible to share your screen setup? How many screens and what are the contents on each screen? Okay. How am I going to do this? I'll share it to you I'll just take a picture and show you guys in the Discord channel. All right. D-Train, I'll share that with you guys on Discord. Okay. So those were the setups that I had from yesterday. Now looking at where we are today and where prices could head towards. Okay, today is the 21st. Dollar index right at that 61.8. Okay, this one is done. Take that away. That one is done. Take that away. We can even consider this whole move. So it's sitting right at 61.8. Okay. At this point here, there doesn't seem to be any other big US news that's going to drive it. What I'm looking at is firstly the S&P and then also the Bank of England interest rate decision that could drive the next move on the dollar index. Okay. Now I'm looking at this as an overall. Okay. If you looked at this, you have a bit of a support there. What I'm actually thinking is that we might see the dollar sit here, consolidate along this point. We might see the dollar consolidate along this point, maybe test a little bit lower, but then possibly bounce back up if we see the pound dollar reverse from this point because of the BOE rate decision. So that's what I'm looking at. Dollar again could consolidate along 103.25, which is the 61.8 level, right? Could test 103 support depending on BOE, could rebound to 103.80. I don't think it'll go that high though. I don't think it'll get up to 103.80, maybe 103.60. Okay, so likely consolidate along this point, might push down a little bit before pushing back up because of some weakness on the pound, which could lead to a relative gain in strength on the dollar index. Good. Now with that, then looking at the Kiwi. Kiwi again is right in the middle of that area of the support and resistance level, but you can see that, don't need that line, but you can see that it's trying to break through this point, right? It's trying to break through this point. If we're going to see a continued weakness on the dollar, we're going to see this push up. I think that what's likely to happen here on the Kiwi is a test and then possibly come back in again. Right, so it's in that area where we have 61.8 there. We have that whole big gap in here. So possibly you might even see something like this on the Kiwi. So I think what I would be looking out for here would be any selling opportunities below 6095. Stop loss 20 pips. Take profit a good 45 to the downside, could even be lower. Could even be lower. If I took that, let's see, 61.8 is right there. Just this area here. I think that's good. That's good. So 6095, 20 pip stop loss, 45 pip take profit. to the downside on the Kiwi. So now Kiwi is no longer a counter trend. We're following the trend to look to sell it down at 0.6095, stop loss 20, take profit 45 to the downside. Then onto the Aussie. Right, onto the Aussie, we have that big push. Firstly, because of that dollar weakness. Secondly, because of the Aussie employment numbers. Let's take those away for now. What needs to happen is that it needs to break above that previous high, that 50% level. If it can do that, we can trade it up towards that 6720 level. That would mean in this scenario, if we see continued dollar weakness, right, 6.666, don't like that number, but 0.666, 20 pips to 60 pips upside on the Aussie dollar. So we're looking to buy on that 0.6660, stop loss 20, take profit 60 to the upside. Then onto the US yen. Look at that. I think someone yesterday was asking, and we said, hey, if it fails to break that point, you know, we'll be looking to sell. Did anyone sell? I didn't do it, but did anyone sell the US yen as it rejected that 151.80 level? Put into the chat. Let me know. Did you sell? You'll be my new hero if you did. Alright, so just to encourage anyone who did to type it up. Did you sell at 151 as the US yen rejected 151.80? Did you sell it down? That's what we spoke about yesterday. I was with the more conservative approach that I wanted it to break the next support level before I would sell. Right, it came right down. I wasn't watching at that point, and then the next moment it came right back up. So I didn't get into that trade either. Quite fortunately, if not, I would have hit a stop loss. So take that away. Let me know if you got into a sell. Zachary sold it from 150.80. Oh, you just caught that. 150.80 is right there. So I think you sold it there. Either you sold it there or you sold it there. Alright. Jumarina short at 151.65. Very good, very nice. That was the closest that you can get. I think it came down to that point. And then you started selling down. Very nice. Good stuff. Zachary on a long-term trade, selling from 150.80. Yep, that's a long-term trade. I think that makes sense. I think that resistance has now proven to be quite a valid level that we're possibly going to see the rejection continue. So we have Jumarina's shorting and Zachary shorting, right? What we are looking at here. This was very odd. I'll show you one funny thing as well. At this time, right, at 2 o'clock my time, and if you look at the dollar index at 2 o'clock, that time there. So just before you see this pushing up, you see this bouncing up, and then you see the yen pushing a lot stronger than what we saw on the dollar. And for a while, it was trying to push up again, and I thought, was it going to be worth trying to buy this up briefly? Because I was actually looking at a trade, you know, like that, a 70 pip and then a 30 pip trade like that. Fortunately, I didn't. I was looking at the dollar index. It started pushing back down, and then it's just sitting right there. Okay, so again on the US yen at this point. If we took this like that, pushed up, okay, there, right? It's holding this level now. I think that again, I would hold off on the US yen. I'll wait to see what happens as it consolidates along this point. If it does break below that trend line and that support level, then 150.40 stop loss, 50 pips, take profit, a good 160 to the downside. Right, this would be like Zachary. This would be a medium long-term trade I set up. So I don't think it'll be something. It seems unlikely that it'll be something that will happen today. So 150.40, stop loss 50, take profit 160. Stop loss 40, take profit 160, 50. Okay. Alrighty. Then onto the pound. This is where it's going to get interesting, and this is where I see the next opportunity, the next trade opportunity come around, likely to come around. All right, this move is done. We can take that away for that 61.8. We can keep that there. That move, we see it testing. Oh, I told you I'm absolutely exhausted. All right, we see it testing 61.8 here in this resistance area. I can even take that point there. Okay, yep, okay. Just checking my level. So what I want to see here, we are about 5 hours away, a bit long to look out for it. 5 hours away, but I'm looking for hopefully the pound dollar to sit at this current level. All right, I want to sit at this current level so that with the news at 8 p.m., about 4.5 hours, 4 hours later, with the news at 8 p.m., what I would be looking for in that case would be a 1.2780 stop loss, 25 pips. Take profit could go down to 70 to the downside. I'm looking for that reversal back down on the pound dollar. Okay, so no more straddle. Take that away. We're looking to sell at 1.2780. Stop loss 25, take profit 70. There we go. Okay, this one is also what we need to see is a dovish BOE. There we go. Hey Audrey, we'll get to usdcad shortly. And Zachary said I mostly swing trade and hold for a couple of days, so it's always interesting to see your analysis and mine from higher time frame to come together. Yeah, that would work very nicely. Okay, then on to the euro. Did not trigger that, take that away. That's totally done already. 61, nope, done already, so we can take that away as well. 61 from this long-term move is still valid, so okay. Let's have a look where 50 is. 50 is also there. It bounced off 50. Okay. And then we have our resistance area to the top there. I would say this whole thing, I would consider this whole thing as a bit of a resistance. Okay, so I think what's going to be quite similar on the euro would be with the pound, because I don't see any big changes in PMI. All right, I don't see any big changes in the Eurozone PMI. So I think that we could see it push back down if the pound dollar does push down. So what you could be, I know it's in the middle of that support and resistance level, but what you could be looking at is about a 25 pip stop loss, 35 pip take profit. That's not very fun. We might not need that. I think we might do something different. We might put that there. We have this point here. And we've seen that whole move there. We have a little bit of a hesitation. We're likely to have a little bit of a hesitation maybe at about that point. Right? So you can possibly look at that. Now let me check one more thing. Break 23.6. I would even go a little bit, no. Okay, 109, 20, 25 pip stop loss, 80 pip take profit to the downside. There we go. So 1.0920, stop loss 25, take profit 80 to the downside. Then onto the US Swiss franc. We had too many things happening. That pushed up, the news prodded back down, so that wouldn't have triggered. We're looking at the news analysis. Now with this, looking for this to push down, right? I would say that, well, remember that we do have the Swiss National Bank with their rates decision to be released in about 45 minutes time. Not expecting a big surprise here. But we might see some weakness come back into play. So this might bounce from this trend line back up again. If you know, you guys know I don't trade the US Swiss franc all that much. I was going to say that we could buy it back up, but it's only a very small trade. It's not even worth trying and catch that. I would prefer to say to look for a either a test and reject of the resistance or a bounce of the support first. So I wouldn't do anything on the US Swiss franc because it's right in the middle of that support and resistance level, and also with a news pending. Okay, so it's do nothing for now. Then, like Audrey was asking on the USCAD, that did not trigger, take that away. Broken the trend line, take that away. It's come all the way down to this similar swing level with the next one lower at 1.3434. Looking at this, you could look for a, you could look for that bounce there or at that support as this. That's fine. Any news? Again, I don't remember seeing any news for the CAD. Not so much. I think for the CAD is that we're going to see it look like it's consolidating. I would like to see it test a little bit lower. So do what it did here. All right. So maybe the dollar now pushing back up. If it consolidates there a little bit, it's sitting there. Okay. So you'll be looking at about 1.3480. Stop loss 20 pips. Take profit a good 60 back up. So we look at that 1.3480. Stop loss 20, take profit 60. 0, stop loss 20, take profit 60. There we go. And lucky last. Also, before my voice goes. Okay, gold did not. Well, we saw how the dollar dropped, so there's no way we'll see gold, or very unlikely we'll see gold dropping. On a good support, push right up towards that resistance level, not resistance, but the round number level of 2200, climbed as high as 2223. Retrace and now pushing back up. You can see that with its retrace. You can just take that move. All right, it came back down to that 38.2 level and looks like it's pushing back up. So if it stays above, be extra careful here. Be extra careful here on gold. His historic high levels. It's going to get very choppy at that point. I think if it's so long as it stays above 2200, you can see it test 2223 again. I would say the most would be about there. Yeah, okay, so gold will have to stay above 2200 for it to continue the upside push. The first target at 2223, and then I would say, you know, by the time if it gets to 2238, it's time to be really careful already. Okay. So gold will have to stay above 2200 to maintain bullish. Could retest 2223, not rest, retest, and beyond that 2238. 2238, yep. Okay, there we have it. Yeah, that's the post FOMC analysis. Quite a number of other possible moves and opportunities we've had. With that said, Please trade well, trade safe. I see a question about pound CAD. Okay, let me get to that. Pound CAD. Okay, pound CAD, what I would be looking at breaking out of that range. Well, we've done that. That's done. We can take that, technically can take that away. But this level here, if it breaks out of this point, right, some pound weakness could drag this lower. Pound weakness could drag this lower to the downside with the next point down here. But I think that it could even rest somewhere in between. Alright, because for this to drop that much, we're going to need not just the pound weakness, but the CAD strength as well. Some strength on the Canadian dollar. I don't see that happening yet, so I think that any weakness on the Canadian dollar might counteract this move to the downside. So nothing yet. I wouldn't do anything in this area because it might bounce, right? But I would look for it to break past this point before I would think that it could head lower. All right, loyalty family, hope that makes sense. And for you're most welcome there, Jumarinas. Thank you, Christina. Thanks, Gorju. Thanks, D-Train. Please trade well, trade safe. If you haven't joined the Discord channel already, the link is there for you guys. I hope to see you all again tomorrow as we end the week of a massive trading week. Take care now. Bye-bye.